Welcome to my channel, I'm 𝗦𝗡𝗎, this is Investing for Idiots. I'm going to break the 10 hours of research I did yesterday into a 5-minute video and one graph, so even if you are a beginner investor or a Warner Brothers Discovery holder, this is the video for you. Yesterday I almost sold my Warner Brothers Discovery position because it was getting too hard for me to understand its debt repayments and it was borrowing more money. I discovered that I had new senior notes. Basically, I hadn't done enough research for a really long time and it meant that I had to go into a whole load of 10Ks and 10Qs all in one day. First of all, I want to say thank you to a few people on Reddit. The people on the value investing subreddit really helped me by pointing me to specific parts of 10Qs and 10Ks and 8Ks that were vital in understanding Warner Brothers Discovery's ability in order to pay off debt. The first complete and total mistake I made was thinking that Warner Brothers Discovery's cash supply was going down. It's only down from the point of the year in which they typically have an extremely high cash supply, which is Christmas. So from Christmas, their cash supply is down 700 million, but actually overall they are up 600 million from the same quarter last year. So if anything, it means they'll be in a better position this year at Christmas. So with their cash supply understood, all I needed to do now was model the debt, which is much simpler. Can't believe how long it took me to realize that the cash supply had actually gone up. I was just looking in all the wrong places. I wasn't looking at the quarterly earnings at one point. What it eventually came down to was me getting all the 10Qs up, lining them up in tabs, and going to cash and cash equivalents on all the latest 10Qs. And then I could see clear as day that their cash supply had gone up since this point last year. Now, the first part of modeling their debt was really simple. Warner Brothers Discovery had put their debt schedule on their website, which a lot of companies don't do, so I'm super grateful for this. It's a bit annoying that it was a PDF. That meant it was a bit challenging to get this into Google Sheets, but the one thing I did not want to do was type this in manually, not only because that would have been a massive faff. If I missed 1 0, that's the difference between 700 million and 7 billion. So I really needed to make sure that I did not get these numbers wrong. I eventually found a way to make the PDF editable, and then I could copy and paste them into the spreadsheet. I did double check after, but yeah, I'm almost certain that these numbers are exactly the numbers from the PDF. So I'm not going to risk any typos on this. But how awesome is this? Now that I've done this, I've got their entire debt schedule in my Google Sheets. And if you want this for yourself, you can just go to the link in the description. That's where my sheet is. The issue is, once I had it in here and organized it quarterly, I could see that the Q2 2023 debt payments weren't lining up with what I could see on Yahoo Finance. They were supposedly only meant to pay back about 200 million in this quarter, and yet they paid back 3 billion. So it's like, whoa, this is fantastic. They're massively overpaying debt, but then actually their debt balance didn't go down by the same amount. So it was a really confusing time, and fortunately I had all the SEC filings open. So what I did was I went through them and realized that they'd issued a ton of senior notes, something like 1.5 billion, potentially 2.4 billion in senior notes, and used that to pay off the 7 billion of debt that's due in 2025. Now, once you've modeled the debt, it's really obvious why they've done this. It would have been extremely hard for Warner Brothers Discovery to pay all of that debt off in that year. And now that debt is broken up and stretched to 2026. I thought Warner Brothers Discovery at the time had just issued these senior notes, and so I posted that on the value investing subreddit. At the time, I didn't realize what these senior notes were issued for. I was concerned that they were being used to pay off current debt. This is where Reddit was so helpful. One Redditor, 𝗏𝗏𝗱𝗏, who said, just issued, this was disclosed in their 8K on March 10th. Again, it would have been an absolute fact to go through each one of the 8Ks until I found this information. 8Ks are released much more frequently than 10Qs and 10Ks. And so the fact that he put the exact date is just brilliant. That's what I love about Reddit. When people post their sources and you can go to the SEC filings and read it for yourself, that's such a time saver. So thank you. Thank you so much, 𝗏𝗏𝗱𝗏. What I could now put together with the help of 𝗏𝗏𝗱𝗏 is their accurate, up-to-date debt schedule with their free cash flow and cash supply. And this is that model. Now, this model does assume that they are averaging 1 billion a quarter in free cash flow, and currently they are averaging 850 billion. million. With this model, I worked out that the breaking point would be somewhere around 500 to 600 million. If we see that as the average free cash flow, that's the time to be jumping ship. And on the senior notes, however, in order to know whether that was a good deal, we need to know how much interest it was. Obviously, as you know, I was extremely alarmed when I heard about these senior notes, but as a few people pointed out to me on Reddit, 6% is an incredible interest rate. Fixed rate interest rate to be getting on any loan at the minute when you consider the fact that the Fed will give you a 5% interest rate, which is pretty much guaranteed. So the fact that it's only a couple of points up suggests that lenders are actually extremely confident in Warner Bros. Discovery's ability to pay them back. It could also, at the same time, suggest that they think the Fed rates are going to go down in the future, in which case they want to lock in somewhere a bit above 6% now. If that is the case, it's a bit of a bullish signal for the market as a whole, but let's just hold our horses there. Regardless of the market as a whole, lenders seem pretty confident in the BBB Warner Bros. Discovery's ability to pay them back. And as we can tell from this model, if Warner Bros. Discovery average 1 billion in free cash flow, they'll do just fine. As I said, they're currently averaging 850 million. Put simply, anything above 600 million is survivable, anything beneath that, and we should be starting to look elsewhere, I feel. As you can see, this is what it would look like with average 500 million free cash flow. It just wouldn't be enough to cover their debt payments. It should also be said that we don't even know with these models that Warner Bros. Discovery are safe. It's just this is the only tools that we have in order to be able to model their debt. This is more than I've ever been able to do before, because typically you don't get such a clear laid out document with all their debt payments. So yeah, I've set a reminder on their next quarterly earnings, which should be November 2nd, that if they are anywhere above negative 792 million, then I'm going to hold. The reason that I don't mind it being negative in Q3 is because they were negative in Q3 last year, and in Q4 they had an insanely profitable 2.4 billion free cash flow. So what I'm thinking is I want them to average over 1 billion free cash flow per quarter in H2. So if they get negative 792 million in Q3, then in Q2 they just need to hit 2 billion and they will average for the year, and I'll be happy. It's so great to have benchmarks, guys. You've got to do it. Don't make them too complicated, but without them, you can't tell when your due diligence is wrong. And if you can't tell when your due diligence is wrong, you'll never learn. The only point at which you will learn is when the stock eventually goes bust. That will be the only indicator that actually tells you you're wrong. So definitely think about setting up benchmarks and calendar reminders so that you can check up on whether your due diligence was right or wrong. So feel free to go find my spreadsheet, link in the description, and you can build your own models of Warner Bros. Discovery's debt. That's all from me. Gonna have a cup of tea. Goodbye, guys.